So getting started, I'd like to go ahead and introduce Matt Mallory, President and CEO of Mallory Agency, as well as Peter Hannapel, the Vice President of Cyber Underwriting at Corvus Insurance. Thank you for joining us today. Matt, the floor is yours.
Thank you, Chris, and thank you everybody for joining us. This was a bit of a 40-yard dash to make sure we could get this off in time because of the timing. And I don't think we've ever been in a more interesting season of cyber breach, cyber liability, etc. We've seen a lot of discussion in the news about this. Peter, we are thrilled to have you with us today. For anyone in the audience does not know you or Corvus or a little bit of your background, would you please take about, I don't know, a minute or so and share a little bit about your journey as a cyber underwriter and what you do today?
Sure, absolutely, and pleasure to be here. Thanks for having me. My name is Peter Hannapel. I'm currently with Corvus, which is one of the insurtech companies who writes cyber insurance. I've been in the cyber insurance space for coming up on, almost 10 years now. I was at 8 years at Hiscox prior to Corvus, and I've been at Corvus for about a year and coming up on a year and a half now. So I've been in the space for a good amount of time, and it's been fun to see kind of how it's evolved. And I can certainly echo your comments that it's been probably the most exciting time in the last 9 years. So it's a good time to chat about cyber insurance.
Yeah, absolutely. It's funny, right before this interview began, I was sharing with Peter and our team inside our firm that Insurance Journal just published that the FBI recovered a portion of the Bitcoin that Colonial Pipeline paid on the ransomware attack they had. So it really is made for like NCIS or some kind of criminal TV show. To let everybody know kind of how the style will be today, how we're going to do this, and what will the interview sound like. We're going to go through a few different topics, and within each topic we're going to have probably 3 or 4 different questions, and then of course we're going to stop because I'm sure there's going to be some there'll be some questions along the way from our audience as well. The topics for the audience, just to know, we're going to discuss a little bit about before the breach. We're going to discuss how much cyber liability should I purchase? So you as a client, the insurance buyer, purchaser for your company, for your organization, or maybe you're advising a client, how much should the client have? We're going to talk about Bitcoin and cryptocurrency. What are they? How does it work? Is it the same thing? We're going to go into after the breach. We're going to discuss current and future threats that are right now happening, but looking ahead, of course, and then some of the most targeted industries. We have multiple industries represented on the call today, and we're going to discuss what are the more targeted industries. So getting started, Peter, if we're focused on the first topic of before the breach, from Corvus policy language, I know we can't broad stroke this and look at all the different policies because there's a lot of different underwriting behind cyber liability, but specifically from Corvus, what constitutes a breach? Please share that with the audience.
Sure, absolutely. And I would say, most cyber policies have similar stances, right? But specifically to ours, because that's what I know best. A breach is constituted by kind of one of two things. One is what is considered a privacy breach, which is basically unauthorized disclosure of sensitive information. So, an example of that would be, let's say you accidentally sent the wrong tax, 1099 form to the wrong employee, something like that, accidental disclosure, or if something more malicious, if somebody came in and hacked you and took that information as well, that would constitute a breach. And then there's also kind of a much broader, what we call kind of a network security trigger, where in most policy forms are pretty broad in the sense where it says basically any unauthorized use of your computer system to do something that is, let's call it, illegal, right? So, certain things that you'll see are denial of service attacks, things like that, your system being used in that way, or, spreading malicious links, spamming people with ransomware links, things along those lines. If your system is used in that way, that can also constitute a breach. So the wording is very broad these days in cyber policies, where it's really, if your computer system is being used in a way it shouldn't be used, some way that you haven't authorized, that could constitute a breach. So the wording is very broad these days.
Yeah, it is very, very broad. And if you could, Peter, turn your volume up a little bit on your mic, just for the audience, just in case um, anyone's having any issues. I know it was coming a little bit low on my side. I appreciate that. Yeah, it is very broad stroke sometimes these days on how policy language is reading. Um, and you went into this a little bit, but if you could share some also on what are some different types of breaches, maybe from a, can a breach happen from a smartphone? Can it happen? What are the different ways that attack can enter into an IT infrastructure?
Yeah, great question there, right? So, breaches can happen at basically any point of your system, right? It could occur at your smartphone, right? You can click on the wrong link and accidentally give somebody access to that. It could happen at your desktop. It could happen at your server. Basically, we've seen it happen at, if you have an IoT connected device, it could happen there as well. I think probably the most famous version of that is the Target breach, several years ago, where it was the mechanical contractor, right, who was monitoring the fridge temps remotely. That was the source of the breach, right? So a breach can occur from anywhere where your network is connected to the internet. Not to scare anybody, but that is really the truth of it. And there's different versions of breaches, right? Probably the one you hear most about these days is ransomware. Ransomware is, constitutes a breach, but there's also the more, we'd call the more traditional hacks. Just somebody tries to get in to steal information, either, stuff that's considered PII. So if you're a healthcare provider and you have, somebody's health records, that could be something that they're going after. Or if you're a retailer and somebody wants to steal credit card numbers, things along those lines. So, breaches can be pretty wide ranging, all the way from, the traditional thing that you're used to seeing, somebody coming after your information, all the way down to a ransomware attack. And it can happen at any point where your network is connected.
It's amazing to me how there's just so many different avenues that an attack can happen and a breach can happen. Again, kind of like the first question that we went through, I know that most clients, most insurance buyers are going to want to know as much specifics behind this question as we can look at. When we're looking from an underwriting perspective on what within cyber liability is covered or insured and what is not. I know, pretty loaded question, pretty heavy question, but if we're looking at what is and what is not covered, can you spend a few minutes with our audience and share some, either 2 or 3 things? Because I realize it's a loaded question.
No, it's fine. My disclaimer whenever I discuss stuff like this is always like, cyber claims are very, very fact dependent. And so it really depends on, how the claim comes in, what occurs. So that's my standard disclaimer there. But, talking broad strokes, right? Cyber policy is intended to cover kind of your digital assets, right? That's the goal of it, right? So the easy way to think about it is what we call third party and first party exposures on that. So third party is kind of the more traditional things that you're liable for, right? So if you were somehow negligent with your network security and somebody sued you because of that, that would be something that would be looked to be covered. As opposed to first party, which is more of like the costs that you would bear if something went wrong, right? The easy kind of way to walk through that is either with a true breach or a ransomware. We'll talk through both of them just so you can kind of see the examples. But with a breach, if you lose sensitive information, right, there are notification requirements in all 50 states. And fun fact, they're all different. So you then need to notify these people that their information was lost. I'm pretty sure, unfortunately, that most people on this call have received at least one of these notices in the last year or two, where somebody goes, "Sorry, we lost your information," right? There's costs associated with sending those out, right? You need a lawyer to draft it. You need to, actually pay for postage. It has to go through the mail, which is kind of a bit, anachronistic, but okay. Then you also have to offer credit monitoring, right? Basically saying, hey, we're going to monitor your credit, make sure nobody's stealing your, identity and trying to open new lines of credit, which is cost associated with it. And that's before you even get into kind of the regulatory side. Let's say you were a healthcare entity, and HIPAA comes after you, right? The OCR comes after you for a HIPAA violation, right? There's costs associated with that. And then kind of on the ransomware side that we're talking about, there's costs associated with, hey, we need to get forensics in to figure out what happened, right? What's exposed, the cost of potentially paying a ransom, and then again, while you're down, right? If your system's locked up and you can't operate, and unfortunately it happens more often than people like to admit or know, but if that's happening, you can't operate your business, which means you're not generating revenue. And so that's what we call kind of a business income loss, right? And the idea behind that is trying to figure out how much of your, you profit you lost and to indemnify you for that. Because if you're down for 2 weeks or 3 weeks and you're not generating profit, right, there's loss associated with that. And that's kind of, so sorry for the very quick broad strokes, but those are some of the areas that it's intending to cover.
No, I think that's great. And it is kind of broad stroke, but all the different ways that the claim can be triggered. And unfortunately, some of those ways that it may not be. I'm going to pause real quick. Chris, do we have any questions from our audience, or can I move forward?
We do, and it reads as follows. What are some requirements or recommendations that cyber underwriting wants to see implemented in a business?
Matt, do you want me to jump on that one now or wait till I think we have that in the next section? I'm happy to answer it now, though.
Yeah, since it came from our audience, go right ahead and answer.
Sure. I'm an underwriter, so I want to see all the best controls possible at all times, right? I know it's a little bit unhelpful, but kind of the things that we're looking for, right? And kind of when we talk to the best IT folks out there, the way they look at this is it's not if a breach occurs, but when a breach occurs and how quickly you can contain it, right? So there's this idea called defense in depth, right? The analogy I like to use is, if you have a castle, right, and the only thing you do is build a big moat around the outside and just protect your perimeter. Well, if somebody gets through that moat, you're in trouble, right? Because you have no other defenses. But if you're really practicing defense in depth, it's really about saying, all right, we think somebody might be able to breach our perimeter. And we're still going to work to make our perimeter as strong as possible. But we will also have other defenses behind that says, okay, if this bad actor gets into our system, they can't move past that, right? And so kind of some of the things that, you generally see is obviously we want to see antivirus, right? It's at this stage of the game, if you don't have firewall and antivirus, please get on that immediately, because those are very, very important, like basics on the outside, right? But some of the things that we're seeing that are really impactful right now are multi-factor authentication. And I tell everybody this: in your personal life and your professional life, anything that has multi-factor authentication on it, turn it on, right? It's another deterrent. It really helps slow this down. And kind of, us specifically, 3 of the areas that we look at are, multi-factor authentication for emails. Making sure that somebody signs in from a different location. Let's say they got your username and password. Maybe you're like me and you reuse a few passwords. Highly recommend a password manager, because that helps with that as well. But if they basically try to brute force their way in, the system would recognize this is not where you usually log in from. Please use your multi-factor authentication. We're sending a text to your phone. Plug that in. That really helps defeat a lot of that. And the other thing that we talk about with multi-factor authentication is privileged accounts, right? So the easy way to think about this is within your organization, right? Not everybody needs the same access to the files as somebody else, right? For example, here at Corvus, right, I don't have any access to the payroll system or to the finance system, right? And quite frankly, I probably shouldn't, right? I'm on the underwriting side. I'm not handling, people's payroll or anything like that. So why give me access to a system I don't need? Because if my account were compromised, right, I wouldn't be able to then get to those sensitive pieces of information. We all know that there's certain people in your organization, let's say your CEO or the person who's in charge of your IT, they probably need this elevated access, right? That they need access to see across the whole system. For people like that who are exposed, you would want to say, we want to see multi-factor authentication anytime they log in from anywhere, right? Because that helps lock down the most exposed accounts. But again, bigger picture, defense in depth, right? Think about if somebody were able to get into our system, how do we prevent them from moving from, maybe they compromised your salesperson's email, right? The salesperson can't get far. How do you contain them, right? And once you've contained them, how do you get them out quickly? So it's about detection, right? It's about quick detection and quick containment. Sorry if I rambled there for a minute, but those are some of the things that we were looking for in those situations.
Excellent answer. Thanks so much for that, and thanks for the question from the audience too. Within a commercial general liability policy, there's a little bit of computer fraud and cyber packed into that, but not nearly enough. And we've learned that over the course of just the last 90 days, not to mention the last 18 months, of the need for the standalone cyber. Share a little bit, or speak to a little bit, the difference between a computer fraud crime policy or computer fraud crime liability versus a true cyber liability policy. Because I think there could be, and it's fair if there could be a little bit of confusion or fuzziness around those two different topics.
Yeah, absolutely. And again, my standard disclaimer, like, cyber crime claims are also very, very fact dependent, and it really depends on kind of what the CGL policy is doing, and quite frankly, what your cyber policy is doing. But disclaimer aside, kind of the biggest difference that we see between that is usually with the kind of computer fraud stuff that you see either in a standard crime policy, and usually the standard crime policies themselves, not just the cybercrime ones, have the cybercrime extensions on them these days. But if you're talking about something that's maybe packaged with your, CGL, those types of things are really kind of what you would consider kind of the more old school approach to cybercrime, where it was something where you're talking about, hey, somebody actually got your bank account information and your PIN number, right, and sent money out, which does happen, don't get me wrong, but the vast majority of the cybercrimes that cybercrime claims that we see are classified as what we call social engineering. And social engineering crimes really look more like, hey, somebody pretended to be my CEO, sent me an email saying, hey, can you buy, a bunch of gift cards for the raffle this weekend, right? And you go, oh my God, my CEO is emailing me. What do I do? You go out and you buy these cards and you send them to the person, right? Turns out it was somebody impersonating your CEO. It wasn't even the CEO's, email address, right? That's something that's a social engineering technique where people are trying to con you out of sending them money. With most, not all, I can't speak to all CGL policies with extension, but most of them don't really have that extension to the social engineering piece of it, right? And that's what we're seeing more and more. I would say the second highest occurrence of claims that we're seeing in the cyberspace these days are social engineering. It's ransomware 1, social engineering 2, right? And it's not the traditional, I have your bank information and I've sent money from it. It's really more of, I'm pretending to be somebody else and trying to con you out of that money, and you send it along. So there may not be coverage under a CGL policy, whereas a cyber policy with a cybercrime extension on it is specifically targeted for these types of cyber risks. And that's generally the biggest difference between the two.
Very, very helpful. That question gets brought up a lot. And thank you for going through that and just kind of wrapping a little bit of a ribbon around each of those different categories, if we want to call it that. We're going to move into a different topic, our next topic, and that is the cost. Most insurance buyers are always curious about the cost of cyber. Or in addition to the cost, how much should I buy? And I think that anybody that have gone up. So knowing that, we know that there's some property and casualty coverages that are continuing to go up in cost. Are you seeing this within the cyber liability market, or do you see a lot of capacity still? Share with the audience a little bit.
Yeah, absolutely. It's an interesting time in the cyber market, right? Because for the first 8 years of my career, it was what we consider a soft market cyber, right? It was pricing kept dropping, terms kept expanding, right? And then probably in the last, let's call it 9 to 12 months, there's been a hardening in it, right? And that's kind of coincided with the rise of ransomware's frequency and severity, quite frankly. So right now, we are in the middle of a market correction for cyber, where for years and years it had been underpriced, and now it is getting back to a more adequate pricing. Now, how adequate depends on, I guess, where you sit in the C-suite, but right now, yeah, it's similar to kind of what we saw in D&O earlier, like about 2 years ago. It's definitely a market correction right now. So in terms of terms, I would say it's much more expensive this year than it was the year before, and I think in the medium term that will continue until there's kind of a more cohesive response to ransomware. I think we're starting to see it from the U.S. government doing a little bit more proactive work there. And I think the combination with that rising cyber insurance coverage costs will push people to have better defenses, which will help mitigate some of that and help bring it down and go from there. But yeah, we are in a hardening market. I would say that capacity is certainly tightened up in the cyberspace these days. It was a little bit of the Wild West for a while, very much less so now these days. So yeah, I would say it's much different now than it was 18 months ago.
Yeah, I think everything is, for sure. And we've seen, from the broker side, definitely a rise in cost. I don't know if I could wrap a percentage around that, or a year over year or quarter over quarter increase, but we're seeing a rise. when we're focused on that insurance buyer, the C-suite, when we're talking about, or even the business owner that might be, that might not have a C in front of the title, most buyers of cyber, or those that are considering it, want to know how it's calculated, because it's a moving object, moving target. There's still some unknowns around cyber. So please share with the audience from an underwriting perspective, how do you, or how is cyber liability calculated?
In terms of cost, how we do it, or like what limit?
In terms of cost, correct?
Yeah, it's a great question, right? And it's a one of the things that my company does is we have kind of a non-invasive scan that allows us to look at the network and assign kind of a riskiness score, right? And that's, a few carriers are doing it now, and that gives us another piece of information, right? But I would say we kind of have our scan information, we have kind of the traditional application information, right? And those are the two things that we use to underwrite an account and figure out, where it should be priced. Now, there's other factors that are, I guess, less unique to the company, kind of like class of business, right? So certain classes of business are, let's say, perform poor because they're either larger targets or the controls generally aren't as good. So you take your combination of class of business, size of it, right? Obviously, revenue comes into play. If you're a billion-dollar company, you're much more likely to be a target than somebody who's a million-dollar company. Conversely, usually they have more lax controls in a million-dollar company, so they're equally risky. But you can kind of put your exposure a little bit more in a box, because if you say, hey, worst case, if this $1 million company is down for an entire year, you're out $1 million, whereas a $1 billion company can lose you $1 million pretty quick. So with a combination of those, kind of revenue, class of business, the standard controls you see on the app, kind of what we get from our scan, you can put it all together and say, this is something that, this is where we think it should be priced. Now, just like with every piece of insurance, that you guys have seen, the goal is to price the better risks better, right? With cyber, that comes from kind of what do the controls look like, within that class of business and along those lines. But yeah, those are the factors that we're looking at when we determine pricing for this.
Very good. And if I can, a sidebar, that wasn't one of the planned questions, but a sidebar question I wanted to ask. We've heard before, Peter, the term files or records that clients have that could be vulnerable or in jeopardy for a cyber breach. Can you just spend just a quick minute on what that really means when we're talking about, or we use terms of a client file or a client record?
Yes, absolutely. And this is a question we get all the time from brokers and agents. So I've answered it a bunch, and I'm always happy to do it. But so basically, the easiest way to think about the way we want to quantify a record is the information that you have tied to one unique individual, right, that you have to report on. Kind of the easiest example we always give is, all right, let's say you're a doctor's office and you have 10,000 patients a year, right? Or 10,000 patients that you see, and they come in twice a year, right? That means you've got 2 visits for everybody, so 20,000 records, right? And the doctor comes back and says, 20,000 records. You go, no. It doesn't matter how many times they come in, right? It's still going to be one unique record. And the same idea, if you collect, if I go to the dentist, right, and I give them, my name, my address, my dental insurance card, and my credit card number, right? Like all of those things, that's not 3 separate records. We qualify it as one. And if I go to the dentist like 3 times a year, that's not, then 12 records. It's still just that one, right? So what we're always looking for that is kind of how many unique people you would need to identify or to notify in case something went wrong. So it's not just the pure number of records. No offense to any lawyers on the call, but lawyers are notoriously bad at this, where you ask them how many records they have and they go, we have 2 terabytes worth of files. And it's like, it's not really what we're looking for, but, we kind of walk them through that same process, and then they can tell you, okay, we have roughly, 10,000 cases a year. Most of them contain some PII, obviously doing workers' comp, a bit more, but they can kind of go through it that way. And the reason why we ask that question is because it helps us, just like revenue helps us assign, hey, this is what our exposure is. The number of records also helps us do that, right? So, we know that if somebody has 1 million records, if they're all lost, we can do kind of some back of the envelope calculations to be like, this is what the cost would be to us versus somebody who has, 10,000 records, right? That's a much cheaper response. And so that's part of the calculation as well, which is why we always ask. But yeah, just the unique individuals is all you need.
Well, I appreciate the clarity you're bringing into that. I know a lot of buyers have always wanted a little bit more clarity, a little bit more dialed in answer for that. Before we move on, Chris, just want to check with you if we have any other questions from the audience.
Nothing else as of right now.
Excellent. We'll go ahead and move forward. Peter, again, from an underwriting perspective, what is, and some of this, of course, falls on the broker's advisory services as well, but what is some of the best way for clients to determine how much liability to purchase? Now, you gave a great example earlier of, you know, $1 billion company versus $1 million, and of course, that's a big window of exposure and liability. But when we're looking at a bit of a broad stroke question here, different industries, many different industries are represented on this call. What would be some best practices in how to pick the liability needed based off the risk?
Yeah, absolutely. So first and foremost, it comes down to, you know, what is the risk appetite of you, right? You know, I have friends who have, you know, multi-million-dollar life insurance policies. I have friends who are like, I don't have any, right? And it goes the same with cyber insurance. I've seen billion-dollar companies who carry 1 million limits. I've seen, you know, $10 million companies carrying 10 mil or 20 million limits, right? So the first thing is kind of determining what your own risk appetite is, right? And that's something that certainly is a conversation between you and probably your risk manager or your agent. But, you know, some benchmarking things that you can do to think about, you know, and this is generally the way I think about it is, you know, you can look at we'll call your breach exposure, right? So do you have a ton of records, right? Let's say you're a healthcare professional and you've got, you know, 1 million records, right? Well, what would the cost be to notify if you lost all that information, right? You're probably talking about a couple $1 million, right? That can add up very quickly, right? So you can say, all right, do I have a ton of records I would have to notify for? If you do, you can do some back of the envelope calculations to say notification, you know, credit monitoring. What does that look like? How much does that cost me, right? And that's a good way to kind of, you know, piece that part of it together. The other side of it is kind of your BI exposure, right? Your business income or business interruption exposure. You know, for something like a ransomware event, right? It's very hard to peg, you know, where are they going to charge your ransom? You don't exactly know, right? But it could be anywhere from, I think the average that we saw was somewhere about 350K was kind of the average over Q4. But, you know, we've seen stuff where it's $5 grand, we've seen stuff where it's multi-million, right? So the range in there, so it's kind of hard to peg that part of it, but you can do a calculation and say, all right, if I'm down for a week or 2 weeks, what does that loss look like to me, right? And that can help you with your risk tolerance, right? Because if you're like, I'm very okay with taking high risks and stuff like that, if you sit down and go, all right, if I'm down for 2 weeks and I realize I'm out in terms of profit, I'm out $2 million, well, maybe that's something you want to insure then, right? But if you look at those two items, right, it's a good way to gauge kind of, hey, this is roughly what my exposure would be in a worst case scenario. And then based on your risk preference, you can decide, all right, how much of that do I want to insure? Do I want to be fully insured for that? Do I want to be, underinsured in that? And, you know, I always have a hard time telling people exactly what to purchase because, you know, quite frankly, everybody's got a different risk tolerance. My wife's is much higher than mine is. That's what I found out. So, but it may be different for you and your team. So,
well, excellent. I appreciate that. One more, forgive me, sidebar question that just based off some of the audience, could be something on their mind right now. Just a minute ago, we were talking about files and records. It made me think about merchant service transactions, credit card transactions, maybe at a restaurant, retail establishment, but then also when you're looking at computer wires, transferring large amounts of money for some kind of acquisition or purchase. Speak to just a couple of minutes, because I know we have some other topics to go into on how cyber works in those two environments and what those buyers, those clients need to be aware of.
Yeah, great question, right? So retail exposure, we'll start there, right? Credit cards, right? Anybody who accepts a credit card is subject to what is called PCI DSS, right? Which is the payment card industry's data security standards. And basically set the rules for how credit card transactions work, right? And there are levels of compliance within that, right? So if you're kind of a small mom and pop shop, you can fill out kind of what they call a self-attestation that you're PCI compliant. It's level 4, the lowest. If you're somebody like a Target or a Home Depot or somebody who is a very large retailer, you need to be level 1 and they have auditors who come in and do that, right? Now, the risk there is similar but different, slightly different in the sense that, you know, if you lose a credit card, you know, notification still occurs, right? You're letting somebody know, hey, we lost your credit card number. The good news though is you can't open somebody else's line of credit with their credit card number, right? That's just impossible. All you can do is kind of run up charges on that. I think everybody's aware that you're not liable for fraudulent charges on your own credit card. So let's say I went to Target. I mean, I actually did go to Target and I actually did lose my card in that breach, right? But I wasn't liable for what anybody bought on that card. Now, you as the retailer who caused the breach could end up being liable for those fraudulent charges. So generally what we see if there's large breaches of credit card information, there's what's called the cost to reissue the card, right? Which is physically cutting the card, stamping with a new thing, sending it out to the person, right? And there's a physical cost associated with that. Now, PCI is set for basically, I think it's over 100,000 cards breached. It's an automatic $2.50 just to reissue the card. So if you lose 100,000 cards, you could be talking about $250K just to replace the credit cards, right? Nothing else. We're not even talking about fraudulent charges. And then fraudulent charges really depends on, how much the bad actor was able to spend before they were caught. And then you could be liable for that if they're not able to get that back. Because I mean, usually what you see is when people are stealing credit cards, it would be like, hey, you get this credit card, you go buy as much high value, usually electronic stuff you can get, and see how long you do that before the card stops working, essentially. And those charges will be passed on to the retailer who caused the breach. On top of that, PCI can issue fines and penalties. They are not what's considered a regulatory body because they're not a governmental body. It's kind of a business union, right? It's Visa, MasterCard, Chase, missing Amex, or a group of them kind of run this, right? So it's not considered a regulatory body. There is coverage for PCI events in cyber forms, though, right? It just doesn't fall under regulatory. It's a fun one. People always ask, like, why is PCI separate? It's because they're not a regulatory body, because they're not governmental. But that's kind of how the retail side of it works. What was the other half of the question there? Apologies.
Yeah, of course. No, it's for any kind of wire transactions, large wire transactions. Obviously, if you're going to wire through a computer transaction or something like that, large sums of money. Speak just briefly on how or what to be aware of from the buyer's perspective.
Yeah. So again, these are the kinds of coverages that would fall under kind of like the social engineering piece of it, right? And the easiest way to talk through the example is, is with a closing home buying, right? And some of these people are very, very crafty criminals, and I give them credit for that. Where there was a situation where, buying a house or any kind of property, right? You have multiple people in the transactions. You have the buyer, the seller, the buyer's agent, the seller's agent, potentially a title or closing attorney, all these different people that are involved in it, right? So if one person in that chain gets breached, and we saw it in this case where the realtor for the seller was breached. They basically the person sat there, was just monitoring the emails that came in, started to understand how everybody talked, how these emails were formatted and stuff like that. And then basically waited until it was time for close, right? And they said, hey, then they popped an email and said, hey, wire this money to this account. And they basically just changed, they made it look like everything was right, but changed the banking information slightly to their own account. And, the buyer sent the money into that account and sat down at closing 2 weeks later. And the guys were like, hey, where's the check for closing? And they're like, what are you talking about, right? And the money was gone, so it was somewhere else. So, the thing we always stress with that is, make sure you have your social engineering coverage there. But anytime there's a change to the information that you're familiar with, comfortable with, we call it out of band verification, which means basically if somebody sends you an email saying, hey, actually, let's use this account to the one you're used to doing. Well, then you call them, right, to confirm that, right? And vice versa. If somebody calls you to be like, hey, can we change this stuff, right? Email them, right? The email that you're used to emailing them at, right? Just to make sure it's a second check there. It's just you'd be shocked how many times, somebody just picking up a phone has saved billions of dollars, but we've seen it happen. So please do it. It's good.
Thank you for going over that. I appreciate you obliging the off-path questions that you and I were discussing. Going into a new topic, Chris, any questions from the audience?
Still nothing yet, but I'll keep a lookout.
Great, thanks so much. Moving into Bitcoin and cryptocurrency, all over the news. A lot of questions, a lot of chatter about this. Peter, when you are looking at these topics, for cyber criminals that are wanting money, is it always either Bitcoin or cryptocurrency? And what's the real difference? Are those two terms interchangeable? What's the difference between the two?
So the easiest way to think about it is Bitcoin is a type of cryptocurrency, right? Cryptocurrency is just a big bucket that's basically anything that's not fiat currency, which is fiat currency is like dollars, pounds, yen, euros, right? The money that we're all used to governments regulating. Cryptocurrencies are essentially trying to think the easiest way to quickly explain it, but cryptocurrencies are essentially non-regulated monetary instruments. Is probably the easiest way to think about it. Bitcoin is probably the most famous, just because it's been around the longest and has the most kind of cultural pull at this point. People use them interchangeably. It's not a huge issue if you do, but just know that Bitcoin is a type of cryptocurrency. There are literally thousands of them. You can create one if you really want to. Just requires some computer work. I don't recommend it. It seems like a giant pain in the rear, but you could certainly do it if you really wanted to. But yeah, that's kind of what that is. Now, why did criminals want it, right? Well, part of that is what we talked about earlier, was the unregulated nature of it, right? So Bitcoin is theoretically untraceable and anonymous, right? You could set up a Bitcoin wallet that would not be attached to your name in any way, shape, or form. It's just a random string of digits and letters, right? And that's your Bitcoin wallet. And that's where you can tell people to send money. So it's fairly anonymous, although as we saw today, the FBI is getting much better at tracking kind of the flows of that and starting to be able to kind of more accurately pinpoint who's behind a wallet, right? But that requires a lot of legwork. U.S. banks are pretty tightly regulated, and anytime you get an influx of cash, I think it's over 10 grand, they have to fill out a piece of paper saying this is where this money came from, right? So if I walked into a bank today with 10 grand and said, here you go, deposit it, they'd have a lot of questions for me, and rightfully so, right? Whereas with Bitcoin, if you ask for a multi-million-dollar transfer, it can be done with no questions asked, right? So that's why it's been very appealing to criminals, because there isn't that same kind of regulatory oversight. Now, part of the problem they have is how do you get it out of the ecosystem, right? And they've been pretty creative about how they've done that, but it is unregulated in that sense. Transfers are done instantaneously. It's not something where it's like, hey, you set up your wire transfer at Bank of America and you have to wait your 3 to 10 business days before it goes through, right? This is something that happens like that, and then it's gone, right? And it's not like you can claw it back. There is no central bank who's in charge of it, right? It's what's called a distributed ledger, right? So it's on every single computer all over the world. So it's not like there's a central arbiter that you can go to and say, hey, I didn't need to do that. Please give it back to me. So all of those things work in the criminal's favor as to why they like it. Does that kind of answer?
100%. Yes, it definitely sheds some light on the topic. For the sake of time, I'm going to jump into the next topic here on after a breach may occur. And let's just kind of talk about real time or the reality of when a breach happens. So an insurance buyer with a cyber liability policy experiences a breach. A claim through the broker is filed with the insurance company. What are the next steps that make cyber, or could make cyber, a little bit unique for that claims experience?
Yeah, absolutely. And first and foremost, I hope nobody ever goes through a cyber attack, because they're not fun, and they can be pretty jarring experiences, right? Kind of one of the things that we always say is that cyber insurance isn't just about having a monetary backstop; it's about having the expertise behind it. Because kind of we'll walk through this and you'll realize there's just a lot of unique, weird things that happen that aren't the easiest thing in the world to deal with, right? So, let's use a ransomware attack because they're happening so much, right? Of course, these things always happen at 5 p.m. on a Friday, right, as everybody's going home. And if you discover that your system's locked all of a sudden, you can't do anything, you can't access emails, you can't send anything out, you can't get anything, and you can't see anything, and all you see is this, hey, we need this much money to get your system unlocked. That's pretty jarring, right? That's not something that many people are equipped to deal with right off the bat. I mean, hell, I do this for a living, and I'm pretty sure I wouldn't have the easiest time in the world dealing with it. So at that point, yeah, you call your hotline and say, hey, we've got this type of breach. And kind of what kicks into gear here is kind of what we call the breach response, right? The first thing that somebody does is there's what's called a breach coach, right? The breach coach sits down and tries to triage the situation, say, hey, what's actually occurring, right? So are we dealing with a ransomware attack? Are we dealing with kind of a standard breach? Are we dealing with, hey, someone just nailed something in the wrong place, right? Because obviously those are different levels of severity and need different levels of response. So let's say, hey, we're in the middle of a ransomware attack. We can't get into our systems. We can't do anything, right? the other part of that that's always tough is like, well, how do you email somebody, right? Do you have your contacts that you need to know? Like, these are why we always say it's good to have an incident response plan. It's good to have it in paper as well, because, if your computer isn't accessible and everything you have is, on there, it makes it tough, right? So it's good to have that, offline as well. I've learned more and more that, the analog world is probably a good thing in a lot of ways. So, but once that starts rolling, right, the breach coach will first thing they'll do is probably get forensics involved. And a forensic investigator will come in, get either digital snapshots of your system, or in some cases, like they literally fly there and they're looking at the actual hardware, because you can't necessarily take snapshots for some of these things. The forensics expert's going to figure out, what happened, how badly it's impacted, and how far it's spread in your system right now. Let's just say worst case scenario, your entire system is locked up, right? You're talking about, they're like, we know that you're locked up at this point. We can't really access your system. We know, we have one of two options now, right? We either have to pay the ransom, or we have to restore from backups if you have them, and they're not corrupted by this attack. Hopefully they're not, right? As you start working through that process, right, there's a couple other things that start occurring, right? So you have your forensics team digging into all of this. You also have legal going on in the background, right? Because, a ransomware attack can also trigger breach notification requirements, right? So you have a legal team going through, each of the 50 state statutes and seeing which one's applicable to you, right? Which is not a fun task, and that's why I'm glad that we have experts that handle it, because you talk about 50 different state laws and potentially federal ones as well. If you're talking about HIPAA, or in Illinois' case BIPA, or CCPA, or God forbid you're dealing with GDPR over in Europe, right? So all these things can kind of come into play there. You have a legal team working on that in the background, figuring out if you need to notify as well. So there's a bunch of activity occurring, right, as your system is still down, you're still trying to figure it out, right? If you come to the conclusion, you're like, hey, look, we can't really restore from backups, right? You decide you actually have to go through with paying a ransom, right? Which is never a fun process. The vendors are equipped to deal with this. So like the people that we work with, like Kivu, CrowdStrike, people along those lines do this day in, day out, right? They kind of have a feel for, they know the actors in the space, right? So they know, hey, if it's this ransomware variant, if you're likely dealing with this group, they may have interacted with them before, right? They'll open negotiations with them or conversation with them. The first thing they try to do is establish, kind of like you do in a hostage negotiation, proof of life, right? You want to find out, this person that I potentially may pay money to, how do I know they have my information, right? Usually what occurs is the bad actor will give you a piece of the information back, unencrypted, be like, look, this is what we've got, or part of what we've got, right? So you can know, hey, they do have my information, or you're dealing with the wrong people entirely, right? So it's the first piece is kind of establishing that proof of life, shall we say. And the next part is you start the negotiation as to what you're paying, for the ransom. What we've seen from kind of ransomware actors is, one of the first things they do when they get into a system is they try to figure out if they have cyber insurance or not. And if they have cyber insurance, they're generally trying to say, hey, we know you've got the money to pay for it. This is what we want in terms of a ransom. But if you don't have it, you can see the negotiations. And if anybody ever has some extra time and they want to kind of see some of the negotiations that happened, like it wasn't Colonial Pipeline, but there's a guy called Brian Krebs on security, and he's got kind of a chat log in there you can actually see the investigators negotiating this ransom demand down. And literally they're saying, hey, we can't pay that or won't pay that. The bad actors are like, we know you're $1 billion company, you can absolutely pay that. The beauty of the internet, I guess they can find out whose system they're in at that point. But they'll negotiate through that process, and if everybody agrees on a price at that point, and you're comfortable paying that ransom, then the vendor would take they have a Bitcoin wall. This is what I always say. It's like, again, I do this for a living. If you ask me to actually figure out how to put a Bitcoin wallet together and go buy it, it would take me a very long time to do it. It wouldn't be pretty. It's not something you just snap your fingers and say, hey, here we go. And much less, figuring out a way to get, millions or, hundreds of thousands of dollars worth of Bitcoin together. It's not the easiest thing in the world. So these guys have that stuff set up, they're ready to go. And if that's the case, pay the ransom, they'll pay it through there. And then the fun process begins of like, you get your information back. Now we've seen the worst case I saw was, they got their information back, but when it was unencrypted, the formatting was all changed. It was basically unusable data at that point. And actually the hacker was actually very apologetic, was trying to fix it for him, because as much as as much as this is like criminal activity, it's also like their livelihood, and they take their reputations seriously in most cases. In some cases have like help centers and stuff like that. It's a very weird, small niche ecosystem, but this stuff all came back. They paid the ransom. It came back in completely unusable and readable format after it was encrypted. So that's the worst case scenario. Best case scenario is they give you the decryption tools. You decrypt everything, and you're kind of, you know, in much better shape at that point, right? And then you can kind of slowly get your systems back up and running. I'm not sure how many people have ever shut their systems down for an extended period of time and seen what the reboot time looks like, but it's not pretty for a lot of people. It takes a while. There's a lot of systems that are interconnected and that require other things to boot on. And your IT guy's probably going to be having a real rough weekend or week of his life getting everything going again. So I kind of sped through a bunch of stuff there, but is that a good kind of?
Oh, 100%. Yeah. I mean, it was interesting as you were going into the different questions. I thought, well, he's answering that one and that one. So I appreciate you going through all of that. Maybe one of our last ones, and Chris, you can let me know if there are any questions from the audience, but maybe one of our last couple of questions here for the sake of time is, as we look ahead, you know, we just discussed after a breach occurs, and thank you for articulating and walking through what the process is, all the different players and who participates and who does what. And I think that any buyer of cyber liability can see kind of the speed that occurs with everything. And it was, and I hope everyone picked up on getting the cyber coach and having someone walk through that with you, kind of a shoulder to shoulder capacity. Looking ahead, Peter, if you were forced to look at what those new or potential threats are that you see from your desk that all buyers or clients should be just aware of, however minor or major they may be, could you just share a few of those just that could be on the horizon, you know, coming in the market?
Yeah, absolutely. So, you know, one of the things that, you know, I actually enjoy about cyber insurance is that the risk has changed over the last, you know, decade, right? In the beginning, we were all worried about like breaches of information. That was the big scary thing, right? And then it slowly started becoming, you know, ransomware is very small demand amounts. You're talking about like $5,000 a ransom, stuff like that. Like this isn't that big of a deal. And then, you know, the last 24 months where it's taken off and severity has increased, the ransom demands are going up, things along those lines. So it's always something new. And what I say is it's kind of like a game of whack-a-mole, right? Because you have these very sophisticated cyber criminal gangs, right, who are trying to make money. Like that's the goal of all of this for them, is they're trying to make money, and they change their operations as it goes along. You know, there are two things happen that counteract that. One, behaviors change, right? Like people start having better IT security, right? So they start going, okay, I'm sure everybody's had to sit through the phishing training, right? I'm sure every company makes you sit through the phishing training. Don't click on the link, don't click on the link, right? That stuff didn't really exist a couple of years ago, but it's getting better, right? You start talking about, you know, IT controls, you know, MFA, EDR, things along those lines that are becoming more and more standard, will help crack down on all of this, right? And then you combine that with, you know, governmental authorities actually starting to do something about it, right? This is the first time, you know, the U.S. government's come out pretty strongly and said, hey, we're going to do something about ransomware. And that's the first time, you know, in years that they've said anything like that, which is, you know, kind of exciting. And that'll certainly put pressure on it. You know, if you can bring international government pressure on these criminal groups, right, that makes their operating, you know, profits a whole lot less, which makes them change up their operations, right? So it'll be interesting to see what they come up with next. I think that we'll start seeing a lot more of, you know, one of the things we're seeing a bit more of now is what's called crypto jacking, which is essentially, think of it as like ransomware. It's like somebody gets control of your computer, right? And they charge you a ransom, right? And that's it. Crypto jacking is this idea of like you compromise this computer, but you sit there and you don't let them know that, right? And what they're using your computer for is Bitcoin mining, right? Or other cryptocurrency mining, right? So the issue with any kind of cryptocurrency mining is it requires a lot of computational power. It requires a ton of energy, like just massive amounts of energy to do it. These people who run these Bitcoin farms, right, are just consuming massive amounts of electricity, right? So it's very expensive to run an operation like that. And somebody who had the right idea was like, all right, instead of me building this Bitcoin mining facility where you know, I have to pay, you know, overhead and I have to buy the hardware and I have to pay for electricity, they were like, why don't I just infect 1 million computers and use 1% of their CPU, not enough that anybody will notice, right, that your computer's running slowly, and have everybody do that for me. So it's just distributed across a whole network. And then they're still getting the same effect, right? They're still getting the Bitcoin mining, but they're not actually paying for anything then, right? Because all the infrastructure is outsourced. And if you lose, if somebody figures it out and you lose one computer, okay, you can go infect 100 more. It's not a huge problem for you. So they're starting to think along those lines, which is both impressive and terrifying. But those are the types of things I can see more and more happening, right? You're going to see, I think, more stuff with Internet of Things, right? I think everybody probably has a smart speaker in their house or a smartphone or all these types of things. I'll tell you, the IT security on those is really, really, really poor because they weren't built with the idea of we need to protect these things from that. So you can see people like hacking, the Samsung smart refrigerators and stuff like that for, they're doing it for fun, but like, if you could create, a network of these things, and this is when you hear people talk about botnets, that's what they're talking about. It's just networks of hundreds of millions of infected computers or internet connected devices, right? They're going to find ways to use those to make money, right? And that's kind of, I think, the next iteration of that. But crime never sleeps, and it's always impressive to see how their brains work. So I'm sure we'll be talking about something new in 12 months.
Yeah, no doubt. This is such a fascinating topic. I mean, it really is ever changing and moving fast. And that's why, one of the reasons we wanted to have this discussion is really talking about how to prepare if a breach is coming. Do you have the right limits? Do you have the right, mitigation practices in place right now? You mentioned the castle illustration and the moat in front of it. Are your prevention practices implemented right now? And then when it happens, what then? If there is a ransomware, what do you do, and how are you supported by the insurance company and by the broker? What are those practices, and then what's coming next? What's that prophetic crystal ball moment? What's happening next? How can we be prepared? And is it more sensationalized by the media, or is it very real? And how can we really understand? And if you've got the Colonial Pipeline, the CNA insurance company stories, the Target stories are such large company stories. How can we take the same attention and place it on companies that are 10, 20, 50 million in revenue, that seem maybe smaller, but still the threat is equally real for them. So, Peter, I can't thank you enough for your time today and walking through all of our audience these questions. We didn't get to all of them, and to our audience, I apologize. We could burn a lot of time going through all these questions for sure. But Peter, thank you for bringing in such great content and guidance on that. To our audience, thank you for being here. Our team will be hosting more of these throughout the latter part of this year, addressing different topics, thought leadership coming, just different deep dives into content and very relevant topics. We hope you'll find a value and that can maybe help increase and strengthen your companies and organizations. We will be posting this on all of our channels and distribution. Obviously, this is recorded, so you can go back with your teams if needed and review or watch anything. And to our audience, if anything was discussed that you want more details on, maybe there's a question we didn't get to that you're really wanting to ask, please just send that to us through email. We're happy to address those as well. But thank you again to everyone. Peter, thank you. We wish everyone a great day. Chris, do we have anything to add before we log off?
Doesn't look like it. I think we're all good to go.
Excellent. Well, thank you again to everybody. We appreciate it. And everyone have a great day. Thanks so much.
Thanks, guys.
Thank you.